Hello MBA 510 students. This is the second in the series of videos on job order costing. Get right to the sheet here, Excel worksheet. In the last video, we had gone over the concepts of period versus product costs and the three inventories. In this video, what we're going to do is we're going to make two financial statements, so just to speak. The first one is called the cost of goods manufactured. This is an internal statement. Notice I put an internal statement, which tells management how much it costs to make the goods that were finished this period. You could almost call this the schedule of cost of goods finished. And it's going to summarize all our product costs and then tell us what was the cost of making goods that were finished. And then in the second one, we're going to make an income statement, which is our usual external report. And we're going to tie these two together. Now keep in mind that in the last video, I had gone over what's a period cost and a product cost. Period costs are basically costs in your administrative headquarters that don't go into the cost of a product. And these are costs that are expensed as incurred or over time, like depreciation, you separate over time. Any costs that take place in the factory are product costs. And remember, the product costs include direct materials, direct labor, and manufacturing overhead. And manufacturing overhead includes indirect materials, indirect labor, and all other factory costs. Okay, so administrative expenses are period costs. They don't go into the product. Depreciation on the factory, it is manufacturing overhead because it is in other costs that is incurred in the factory. Depreciation of office equipment does not take place in the factory. It's period cost. Supplies in the factory, those are manufacturing overhead. I would say they're indirect materials. Remember that manufacturing overhead includes direct materials, includes indirect materials, indirect labor, and all other factory costs. Maintenance on the factory, another factory cost. Utilities on the factory, another factory cost, so manufacturing overhead. Sales commissions are period costs. Now, sales commissions, you may say, well, they have to do with the product, but the sales commissions only take place after the product is finished. So they're a period cost. They're a marketing cost, advertising type cost. Then you have indirect labor. Indirect labor is manufacturing overhead. As I said, manufacturing overhead is indirect materials, indirect labor, and other factory costs. Rent on the factory is another factory cost. And then you have your purchase of raw materials. Now, raw materials can include both direct materials, which are a separate type of product cost, and indirect materials, which are manufacturing overhead. In some examples, they're separated, and some not. Your textbook tends to not separate them, so that's that. And then finally, your direct labor costs are a separate type of product cost. And finally, your advertising expense is definitely a period cost. Okay, then you have your three inventories. Your three inventories are basically raw materials, which are, they're the raw materials that you have, and work in process. Work in process is basically right here, assembly line. And then your finished goods inventory, which is, think of the flow. You have raw materials, they're put on the assembly line, and they're put in a finished goods store. Okay, now the first thing I'm going to do here is I'm going to put together my schedule of cost of goods manufactured. Okay, and what I'm going to do is, what the schedule of cost of goods manufactured is it gives you, it summarizes for you and calculates for you the cost of goods that were finished this period. Okay, and what we're going to do is, what it does is it summarizes all of your product costs. And we'll look at your product costs in a second. Okay, so the first thing we do is we're going to have three sections. The first one is your materials product costs. The second one is your direct labor. And the third section is your manufacturing overhead. Okay, so remember that raw materials are in inventory. So we want to calculate the cost of raw materials that we placed into production. Okay, so we're going to start by taking the beginning raw materials inventory. To that, we're going to add our purchases of raw materials, which are up here. We have a little schedule up here. And our purchases of raw materials, $124,000. Right there. $124,000. My computer's freezing. Okay, but if you take the 9, which is your beginning raw materials inventory, and add your purchases, that gives you the raw materials that you could have placed in production. This is like the cost of goods sold calculation that you learned in 201. So logic has it, if you begin with 9, purchase 124, these are the raw materials that you could have, that are available to have been put into production. If you take out your ending raw materials inventory, 11,000, and I'm going to put it over here, this gives you the raw materials that were actually placed in production. And that kind of makes sense. So I'll just put raw materials here. That's your first major type of manufacturing cost. Now, we've included both direct and indirect materials there, which your book kind of does, and it's a little inconsistent, but the concept is here. The first thing you have to do to manufacture a product is put materials on an assembly line. Okay, so that's the first type of product cost that is summarized here. The second type is very easy. It comes from your payroll, and those are your direct labor costs. So I'm just going to go ahead and put direct labor, and that would just come out of your payroll department. Those are the costs of your assembly line workers working directly on the product. Keep in mind that indirect labor is going to be part of manufacturing overhead. And so finally, our third type of manufacturing cost is going to be manufacturing overhead, where I'm putting the cursor right there. And manufacturing overhead includes indirect materials, indirect labor, and all other manufacturing costs all other costs in the factory. Like I said, your book is a little bit inconsistent with indirect materials, so we'll see if we can sort of clear that up in the next video. But anyway, but it does give you. We are summarizing your basic costs of materials, labor, and overhead. Okay, so let's go ahead and summarize. See what we get for overhead here. Rent on the factory building, has to say factory, was 70,000. Indirect labor, which is part of manufacturing overhead, is 54,500, which is right there. Okay, utilities on the factory are 8,000. Right there. Notice that if it says factory, it's manufacturing overhead. So look for that word factory. Maintenance on the factory equipment. 20,000 is your maintenance on the factory equipment. Your supplies. Different supplies, maybe for upkeeping machines or whatever, even not packaging, but machines, maybe packaging types of things. Those are manufacturing overhead. And then finally, the depreciation of the factory, not depreciation of the administrative building, but depreciation on the factory was 30,000. Okay, so this gives you your total. This sum here is going to give you your total manufacturing overhead that you incurred during the period. Gives you 184,000. And so if you take the raw materials placed into production, the direct labor that was incurred, that you paid only for factory workers, and the 184 in actual manufacturing overhead. And I'm specifying actual because when we do the final of these videos, we're going to distinguish actual from applied. When you take those three costs, those are the costs that went into both, and I've got the cursor here, work in process and finished goods. So these were the total costs that went into both goods that were not finished, that is work in process, and finished goods inventory, which were finished. Now, the schedule of cost of goods manufactured is only supposed to give us the cost, the bottom line is only supposed to give us the cost of goods that were finished. So how do we make the adjustment from costs that went into both non-finished and finished goods? Well, it's not too hard. What we do is we're going to take total manufacturing costs, which are the costs for both incomplete and completed goods. And what we're going to do is we are going to add to that our beginning work in process, and then we're going to subtract out our ending work in process, and the total of the cost of both, of all goods, of everything, both non-finished and finished goods, plus your beginning work in process minus your ending work in process, gives you the cost of goods that were manufactured, cost of goods that were finished. Okay, and that makes sense because if these were all the costs you incurred, the beginning work in process probably was finished and went off the assembly line. These, by definition, ending work in process by definition are not finished. So that gives you the cost of goods that were finished. Now we're going to go down here, and we're going to go down to our income statement here, and this is the external income statement. I don't know the year here, but I do want to emphasize that this is the external. This is the external income statement here. Okay, and then and this is going to be exactly like the income statement that you made in Accounting 201. The only difference is in cost of goods sold, rather than having, because we're not a retailer, we're not purchasing inventory, we're making it. So cost of goods manufactured is going to replace the purchases of inventory. Okay, so let's start with our sales revenue. Our sales revenue up here was, let's see, 700,000 was our 700,000 was our sales revenue. Okay, and then to get your cost of goods sold, which is basically the cost of your finished goods, what we're going to do is we're just going to take, this is like beginning inventory in Accounting 201, but we're just going to take our beginning finished goods inventory, add to that the cost of goods manufactured, which was the cost of goods that were finished, like I keep emphasizing. So this is going to be, that's going to be a plus. So this beginning finished goods inventory plus cost of goods manufactured gives you your goods available for sale. So this is like exactly like, it's very, I wouldn't even say it's analogous, it's just about exactly like the cost of goods sold calculation in Accounting 201. Now, if we take out the goods that we didn't sell, which is our ending finished goods inventory, right there, and I've got to put a minus there, that's going to give us, if we take goods available for sale and take out what we didn't sell, that's going to give us our cost of goods sold. So everything's basically the same, except the names change. We've got finished goods. We put in all the costs of goods that were finished during the period, give us our goods available for sale, take out our ending finished goods inventory, and that gives us our cost of goods sold. So like in 201, if you take sales revenue, or Accounting 503, excuse me, and take out, I should do this as minus, your sales revenue minus your cost of goods sold, you get your gross profit. Now, everything after this, these are our period costs. And I put 3 or 4 of these in here. I'm calling them selling and administrative expenses now. But these are really, I'm going to put in here, these are your period costs. Your period costs, like we said at the beginning in the first video, period costs are not expensed through cost of goods sold. All these costs up here, the statement of cost of goods manufactured, these are all product costs. Those are all product costs because they go into cost of goods sold, basically through cost of goods manufactured, right there at 371. The period costs are always expensed directly on the income statement, as they're administered or incurred. Okay, so as they're incurred. So we're going to do, this is going to be, we're going to take out sales commissions. So we're going to take out sales commissions, which were a period cost. So your period cost here is sales commissions is that number right there. We're going to take out advertising expense, which is not a part of the cost of your product. Selling and administrative expenses are as part of the type of selling expense. So there's your advertising expense, and I'm going to put a minus there. And then we're going to take out administrative expenses. So administrative expenses are right here, and I'll put a minus there again. So to be more clear about that. So our total selling and administrative expenses is 30 plus 90, or minus 90 plus 60. So our total administrative expenses are 180. And what I'm going to do is I'm just going to go ahead and move them over here to be more consistent. And then we will subtotal right there. It gives us 180. Okay, and then so this will be a subtotal. So if we take our gross profit of 284, wait for my computer to catch up here. If we take the gross profit of 284 and subtract out 180, that will give us our net income of 104. And I'm going to go ahead and, just to be consistent about this, I'm going to make that this 416 a negative, and then just to make this consistent here, so you can see the signs. That gives us a net income of 104,000. And I just want to specify that all your period costs, this is a period cost. Next one is a period cost. And the next one is a period cost. All the period costs are expensed after gross profit. So all your product costs are included in that 371. Here's all your product costs here, the statement of cost of goods manufactured. There's your 371. All our period costs are expensed after the gross profit on the income statement. So that finishes this video. I think this is the shortest one. And just to show you where we're going with this, the next video, we're actually going to get into the cost system. And it might be a little bit confusing, but this will be like it's done in the textbook, but we're going to get into the cost system. But all the cost system does, you're going to see that it's a T account representation of both the statement of cost of goods manufactured and the income statement. Anyway, so take a quick look at this video I just made, and then we'll get into the T account in the next video. Okay, so I hope everybody's healthy, and I will put this video right up. Only 16 minutes, not bad. Only 16 minutes, not bad.